It has been a rough quarter for Apple with tariffs, supply chain issues, and the company still recovering from a botched Apple Intelligence rollout in the view of many investors. Apple is reporting earnings after the close on Thursday, and our next guest says it is one of the most anticipated earnings calls for Apple ever. For more, we're bringing in Tom Forte, Managing Director and Senior Consumer Internet Analyst at Maxim Group. Tom, it's great to see you. One of the most anticipated ever. Talk to me about why that is, please.
Yeah, so as a longtime follower of the company, dating back to when Steve Jobs ran it, I'm very curious to see how Tim Cook is going to manage tariffs, supply chain, and all the issues that are facing the company. I was very, interested to see that they shipped $2 billion of iPhones from India as a way to mitigate the tariff impact. So I think this is must-watch TV, must-listen to earnings call. I'm very much looking forward to it.
Tom, I was speaking to another Apple analyst today, smart, longtime Apple watcher like yourself, Tom, and he really thought, listen, he agreed. He thinks tariffs are front and center this quarter for Apple. It'll be tariff question after tariff question on the call, he thinks. I guess, how you are thinking through it yourself, though, Tom. I mean, the question is going to be posed to Tim Cook in some fashion of basically like just how are you navigating the potential Trump tariff impact? What is the strategy? What is the game plan? What do you think he's going to say there?
So 3 thoughts. So listening to Tesla last week, Josh, it occurred to me, could Apple do something similar, which is make its products on a regional basis like Tesla's doing? So could they make iPhones both in the US and China and India? The challenge there would be being able to do it at reasonable cost in the US. Second, I think when it comes to tariffs, it's ultimately how much can a company rely on suppliers to bear the incremental cost? How much of the incremental cost will the company bear itself? And how much will they attempt to pass on to consumers? And in that regard, I think Apple has, premium brand, sells higher priced items. So they do have some pricing pressure or pricing power, but certainly an interesting situation for Apple.
I mean, there's pricing power and then there's pricing power, Tom. I mean, we've heard estimates from some of your peers on the street about how much producing phones in the U.S. could cost in terms of the finished product. And we're talking huge figures here. We're talking maybe a doubling of price. Do you think that's an exaggeration? And do you think that consumers would bear that cost, would be willing to pay it?
I don't think it's an exaggeration as far as, if there's 100% tariff on items made out of China, Apple's items are not exempt. How much could that increase the cost if an iPhone were made in the US? At the same time, though, I think some of the narrative on Apple is just too negative. So what you've seen in many instances is that the carriers are bearing the incremental cost. They're passing on heavy promotions to consumers. So I think while I think the next 12 months and 18 months is challenging for Apple, if you look at the things that have happened in the past, such as a high level of promotional activity by the carriers, or simply moving production to a lower tariff country, India versus China. So I think it's going to be challenging, but perhaps maybe not as challenging as some people fear.
Tom, the stock is down heading into this print. It's down about 15% year to date. I mean, how much of the potential bad news do you think is already priced in here?
Yeah, so I think, Josh, you hit the nail on the head there, which is the quarterly earnings is really all about how much of the bad news is priced in there. So they had a double-digit decline in sales to China in the December quarter. Let's assume they had another double-digit decline in the March quarter and are on pace for another double-digit decline in the June quarter, and then margin compression from tariffs. I think that down 15% might be tested. There is potential that the near-term performance could be even weaker than that, and maybe the shares come under pressure on Thursday.
Tom, I want to switch gears and ask you about Amazon as well, because here's a company that is also exposed to tariffs, particularly its third-party sellers are going to be exposed to tariffs. We've already heard, for example, some Chinese sellers of goods in the U.S., like Shein and Temu, saying that they are going to make some changes here ahead of the de minimis tax exemption going away. So what do you think this all means for Amazon?
Yeah, so same challenge for Amazon. How much of the incremental cost will be borne by the sellers, Amazon itself, and how much will be passed on to consumers? I think what you're going to see is initially they're going to try to pass the costs on to consumers. Then the question will be, how soft will sales get? And will they continue to be able to pass on price increases, meaning the sellers? So it looks like there may be fewer promotions for Prime Day, weaker sales for Amazon. But what's really important for the stock is enterprise sales holding up well, especially as it pertains to cloud computing. So when you think about the potential for a recession, if you see weakness there, and then also if you see weakness in their advertising revenue, high margin, high growth, I think that's what could slow shares of Amazon more so than a weaker consumer environment when you think of the relative importance of the cloud computing and advertising business versus e-commerce for Amazon.
I'm curious, Tom, heading into this print, when it comes to hyperscalers, the cloud giants, there was, reports, rumors, hot talk, Tom, you saw it about, whether we were seeing a slowdown in AI capital spending. I'm curious what you make of that.
What I make of it is, I wish they would acknowledge what they would do if their dollars went less far. So one of the other challenges for tariffs for Amazon, as an example, which is committed to spending $100 billion in CapEx this year to advance their AI efforts, is what if all the chips and all the components that are part of that spend are now more expensive because of tariffs? Do they raise the $100 billion in spend, or do they acknowledge that they're not getting as much capital equipment from the $100 billion? That's what I would like to hear, but so far I've not heard from anyone in earnings so far.
We'll be listening closely. Tom, thanks so much. Appreciate it.
Thank you.
And tune in on Thursday for Yahoo Finance special coverage of Apple earnings. Coverage begins at 4:30 p.m. Eastern here. And as Tom said, it's going to be much-watched TV, so you don't want to miss it.